Well, good afternoon. Let's look at the markets now. The U.S. Consumer Price Index rose by 7% in December on a year-on-year basis. That's the highest inflation print seen in 39 years, jumping from a 6.8% print in November. Global markets have responded with a weaker tone as investors digest the news and try to gauge the speed at which the U.S. Fed and other central banks will hike interest rates. The local JSE market has also been trading in negative territory, with most stocks declining, with the exception of financial stocks. That could be on the back of a slightly stronger rand, which is trading below 15.30 against the US dollar. The big question locally is what impact will a more aggressive monetary policy tightening stance in the US have on the local interest rate picture? This is in light of the fact that local inflation has been steadily rising, and the fact that the Reserve Bank began its rate hiking cycle, lifting interest rates by 25 basis points in its November meeting. This is in the context of a still fragile economy, with some arguing that the Reserve Bank should be providing more stimulus to the economy rather than withdrawing it. Now, let's look at what's happening when we look at the Asian markets early this morning. They mostly fell as Wall Street saw gains despite a red-hot inflation report that set market expectations for rate hikes. Chinese markets deepened losses in the afternoon. Hong Kong's Hang Seng Index lost 0.1% after rising earlier, and Japan also fell as the Nikkei tumbled 0.9%. Though CPI is not the Federal Reserve's primary inflation gauge, policymakers are watching a variety of measures as they embark on the first stages of tightening, the most accommodative policy measures in the central bank's history. Big banks in the U.S. are also in focus, with a number kicking off the fourth quarter earnings seasons tomorrow. JP Morgan Chase, Citigroup and Wells Fargo are slated to release quarterly results before the U.S. trading session starts. To talk to us about the latest market developments and interpret them for us, we are joined by Patrice Rousseau, who's the Chief Investment Officer at Ashburton Investments. Patrice, thank you so much for your time. I mean, given what we saw yesterday, especially last night when the CPI numbers came out in the afternoon and how the market reacted, what are you seeing in terms of the difference in market performance compared to last night versus to this morning or even right now?
Good afternoon, Nastasia, and Happy New Year to you and your viewers. As you mentioned, U.S. inflation numbers have been surprising on the upside. If you think about it, 7% is the biggest rise in inflation in the U.S. since 1982, which is quite eye-popping, and is being driven there by rental increases and food price increases, which is important from our viewpoint because it means that it really is going to drive interest rates higher, which were at record lows, and there's talks from the Federal Reserve Chairman that rates might even go up as early as March, which is in 2 months' time. So if that's the case, as you asked a question earlier, that does mean that it constrains really the ability of our own Reserve Bank in terms of probably forcing the Reserve Bank to follow suit, and probably forcing them to raise rates in unison to what the Federal Reserve is likely to do.
But as an investor, I mean, how do you brace for that central bank divergence, especially when you look at, what the Fed is going to be doing, what, this ECB will be doing, and the Bank of Japan and the various other sort of major economies, and then you bring in South Africa into that conversation. How do you prepare for that?
Well, it's a very interesting question. I think last year, if you look at markets, the S&P, which is the US market, the biggest market in the world, did close to 30%. The NASDAQ has had no negative year since the global financial crisis in 2008. So it's been a positive year, strong double-digit growth even last year. And one of the reasons is there's been a lot of liquidity since the global financial crisis and after the COVID crisis being pumped into the developed world, which has pushed especially what they would call these long-duration stocks. So stocks which are really trading at very high multiples, and they've gone up even more. So the question is, as interest rates rise, we expect these stocks, so the NASDAQ type of technology stocks, to pull back. And I think the beneficiary, oddly enough, have been areas of the market or of the world which haven't done as well. So emerging markets have underperformed. If you look at the performance last year, emerging markets have been dragged down by the performance of especially Chinese stocks. And if you think of the JSE, our own market, South Africa, we're very linked to China. We've got commodity stocks, which depend on commodity prices. And obviously, the biggest stock on our own exchange is Naspers. And that's linked to the performance of Tencent, which is listed on the Hong Kong Stock Exchange. So I think there is likely to be a reversal out of the very hot, expensive US tech market into the emerging markets, and South Africa indirectly will benefit because we're exposed to commodities and to US technology stocks through Naspers.
Let's bring it locally for a bit, because for the past few months I've been looking at Steinhoff's share price, and I mean it's climbed quite remarkably over the past month, and this is on the back of the company reaching agreements on the last two claimants as it relates to their final legal settlement. Is there value in this particular one, or are you sitting on the sidelines just watching as everybody gets involved, or watching as this plays out?
Yeah, it's a difficult one. It's very speculative. If you go back, Anastasia, a few years, I think 2017, the stock, it was at 70 Rand. It's now 5 Rand, 60 odd. It's doubled from its lows. Yes, you mentioned, I think the restructuring of its debt, it's got a massive debt burden of I think 10 billion euros. If it can restructure that debt where it's paying very high interest rates of 10%, that will mean that the company is in a more sustainable position. Its underlying assets are doing well because, I mean, you would know Pepco and the equivalent business in Europe. And what he's doing to reduce the debt burden further is to list some of its assets. Mattress Firm, it's a big company selling mattresses in the US. It wants to list it, raise money. It wants to list its furniture business in Australia. And it's already sold some of its stores in Europe to 23 stores to one of the big European furniture retailers. So it's raising money, and I think the market is getting slightly more confident. You asked the question, how do we position ourselves? I think right now it's still very speculative. We see other opportunities in the market which are more attractive than that. But yes, those who managed to get into Steinhoff at the very bottom would have doubled their money, and it's up almost 5% today.
All right, so we were talking that one of the other issues that, I suppose not even an issue, but the other key event that investors will be looking out for is U.S. earnings seasons. What will you be listening out for, especially when you look at some of the companies that you keep an eye on?
Yeah, U.S. earnings season, I think for the full year of 2021, earnings probably up 40%. Last quarter should be up another 20%. So I think in terms of the past year, I think things have looked extremely good. We'll be looking at for the outlook. So rather than the results, I think investors will be focusing on what do the CEOs of companies say the outlook for 2022 is going to be. And there's two big issues. One is the supply chain disruptions. Are the companies able to get volumes and procure supply again? That's one issue. And two is inflation. You talked in your introduction about U.S. inflation at 7%, but that's a general issue around the world. So companies need to pass on inflationary pressures, and if they are able to pass on these inflationary pressures and maintain their margins, I think that will be good for profitability. But they will guide on that in their results outlook statement.
Patrice, thank you so much for your time. That is Patrice Rousseau from Ashburton Investments. And we will be expecting a little bit more volatility, especially as it relates to the dollar index, as we do have a lot of the U.S. Fed presidents lined up on the roster later this afternoon ready to speak.